Silver is on fire in late September 2025. After years of being overshadowed by gold and other assets, silver has surged into the spotlight, climbing to levels the world hasn't seen in over 14 years. The price is holding firm above $46.50 an ounce, and the buzz across Wall Street, Main Street, and global trading floors is focused on one burning question. Is silver heading for $50 next? Or is this rally about to hit a wall? In today's deep dive, we're going to break down exactly why silver is rallying right now, what's fueling this momentum, what risks lie ahead, and what experts are watching as we head into the final quarter of 2025. We'll explore the forces of Federal Reserve policy, the explosion of solar demand, the power of technical momentum, and the role of supply constraints. This isn't about hype. This is about facts, data, and information that every U.S. investor and market watcher needs to understand. So let's get into it. Silver's rise isn't just another market blip. It's the culmination of several powerful forces colliding at the same time. The Federal Reserve is hinting at rate cuts. Inflation pressures are still lingering. Gold is sitting near record highs, and global industrial demand for silver, especially from the booming solar sector, is at levels that analysts describe as structurally transformative. That's why silver isn't just creeping higher, it's exploding toward resistance levels not tested since the early 2010s. And traders, analysts, and economists alike are asking, will silver finally break through $50 per ounce? A level that has served as a psychological and technical barrier for more than a decade. The Fed factor, rate cuts and real yields. One of the clearest drivers of silver's rally is U.S. monetary policy. Silver, like gold, doesn't pay interest or dividends. That means its attractiveness often depends on real yields, essentially what investors earn on safe bonds after adjusting for inflation. According to the latest reports, traders are betting heavily that the Federal Reserve is preparing to cut interest rates. Why? Because economic growth data has softened. Job markets are showing signs of cooling, and inflation, while still elevated, is moderating enough to give policymakers room to ease. FX Street reports that silver is holding its gains specifically on these Fed rate cut bets. A lower interest rate environment tends to weaken the U.S. dollar and reduce real yields. That combination makes silver much more appealing to both institutional and retail buyers. And right now, markets are aligning with the idea that the Fed will move toward easing, perhaps sooner than later. This isn't speculation in a vacuum. The dollar index has been trending softer, treasury yields are pulling back, and silver is responding exactly as the textbook suggests, by pushing higher, breaking through resistance levels that previously capped its upside. Industrial demand, the solar surge. While Fed policy is critical, silver's unique position compared to gold is its industrial side, and here the story is even more compelling. Silver isn't just a precious metal, it's an industrial workhorse used in electronics, batteries, medical equipment, and most importantly right now, solar panels. FX Empire highlights a surge in solar demand as a game changer for silver. Photovoltaic technology, which depends on silver's conductivity, has become the backbone of renewable energy installations worldwide. As governments and corporations race to meet ambitious climate goals, demand for solar panels is skyrocketing. And with every panel requiring silver, the metal's industrial consumption is surging to unprecedented levels. The International Energy Agency has already warned that demand for silver in solar and electronics could outpace supply for years to come. Analysts are calling this a structural deficit, meaning demand is rising faster than mining supply can keep up with. That's not just a bullish talking point, it's a fundamental shift in how the silver market operates. And this is one of the reasons experts believe the rally has legs. Unlike purely speculative momentum, industrial demand provides a floor under prices. Even if investors take profits, manufacturers still need the metal. And with the U.S. ramping up clean energy investments, this demand story is directly relevant to the American economy.
Gold's strength, a reinforcing force. Silver often moves in tandem with gold, and right now, gold is strong. FX Empire's coverage notes that silver's march toward $50 is being reinforced by gold's resilience near its own highs. The two metals aren't identical, Gold is more of a pure safe haven, while silver straddles both safe haven and industrial roles. But historically, when gold rallies, silver follows. That correlation is once again in play, with central banks, particularly in emerging markets, increasing their gold reserves, and with inflation fears still simmering, gold has retained investor interest. That halo effect is boosting silver, amplifying its own drivers and pulling it higher in sympathy. Technical breakouts, the $45 to $50 zone. From a chart perspective, silver is in rare territory. TradingView's latest update shows silver climbing to a fresh 14-year high. That means prices have broken through long-standing ceilings that previously capped rallies. Technical analysts often talk about resistance levels turning into support. Right now, the old resistance band around $45 has become a new support zone. That's a bullish technical signal. It suggests that unless silver collapses sharply, the market may now treat $45 as a floor rather than a ceiling. But the next big test is $50. This is both a psychological and technical one. It's where the last major rally, more than a decade ago, ran out of steam. If silver can convincingly break and hold above 50, analysts believe it could open the door to further upside, perhaps toward $55 or even $60. Still, momentum indicators like the Relative Strength Index are flashing overbought. That doesn't mean a crash is imminent, but it does suggest the possibility of short-term pullbacks or consolidations before another leg higher. Supply constraints. Why more silver isn't always easy. One of the fascinating aspects of the silver market is that supply is relatively inflexible. Unlike gold, which is mined in dedicated operations, much of silver's production comes as a byproduct of mining for other metals like copper, lead, and zinc. That means even when silver prices soar, output doesn't necessarily jump proportionally. FX Empire notes that this dynamic is a key reason why deficits persist. New silver mines take years of investment and development to bring online, and higher prices don't immediately solve that bottleneck. Combine that with rising energy costs, geopolitical risks in major mining regions, and environmental restrictions, and the supply side of silver looks constrained for the foreseeable future. That supply limitation adds fuel to the current rally. It doesn't guarantee prices will only go higher, but it does mean that when demand spikes, supply struggles to catch up, creating tight markets and volatile price action. The dollar connection. Why Americans should care. For an American audience, the dollar's role in silver pricing can't be overstated. Silver is priced globally in dollars, which means movements in the greenback directly impact how the world values the metal. Recently, the dollar has been softening as traders bet on rate cuts. That has provided a tailwind for silver. But the flip side is also true. If the dollar strengthens due to global risk-off sentiment or unexpected Fed hawkishness, silver could see downward pressure. This makes silver's current rally not just a story of industrial demand or supply deficits, but also a story of U.S. monetary credibility and dollar strength. For Americans, it's a reminder that what happens in Washington at the Fed and what happens in the dollar index ripples out into commodities markets in ways that affect everything from investments to manufacturing costs.
Risks ahead. Why the rally isn't guaranteed. Despite the optimism, it's important to recognize the risks that could stall or even reverse silver's rally. Fed surprises. If inflation proves stickier than expected, the Fed could delay or scale back cuts. That would strengthen yields and pressure silver. Stronger dollar. Any sudden surge in the dollar could weigh heavily on silver prices. Industrial demand softening. If industrial demand softens because of a global recession, silver could lose one of its strongest tailwinds. Profit-taking and volatility. Markets rarely move in straight lines. traders may lock in gains, creating sharp pullbacks. Technical rejection at $50. If silver fails to break decisively above 50, the rally could stall in this zone, leading to sideways consolidation. The road to $50, a defining moment. So where does this leave us today, September 2025? Silver is sitting in a historic moment. Prices above $46 an ounce are already remarkable, but the market is staring down the $50 threshold with intense anticipation. Will silver break through, fueled by Fed easing, solar demand, and tight supply? Or will it pause, weighed down by resistance, overbought technicals, and potential Fed surprises? That is the defining question of this market right now, and the answer will shape not just silver's near-term path, but potentially its long-term role in portfolios, manufacturing, and the global economy. What makes silver's rally so captivating is that it isn't being driven by a single factor. It's the convergence of monetary policy, industrial demand, technical momentum, and supply dynamics all colliding at once. For U.S. audiences, it's a reminder that silver is not just a shiny metal. It's a reflection of economic policy, technological change, and global market psychology. As we close out September 2025, silver's story is one of both opportunity and uncertainty. The march toward $50 is alive, but so are the risks that could derail it. What happens in the next few weeks, particularly with the Fed and with global industrial activity, may decide whether this rally cements itself in history or becomes another failed attempt at breaking through. Disclaimer: this video is for informational and educational purposes only. It is not financial advice, investment guidance, or a recommendation to buy or sell any asset. Markets are volatile and prices can change rapidly. Always do your own research and consult with a qualified financial professional before making any financial decisions.